All right, let's talk about Canaan Inc., ticker CAN. Because right now, if you look at the charts, it's a fascinating story. It's a classic tug of war between the bulls and the bears. And honestly, they are telling two completely different tales at the exact same time. So let's break it down.
To really get a handle on where CAN might be going, you got to first look at where it's been. And trust me, it has been one heck of a roller coaster.
I mean, just look at the last 3 months. The stock starts off around 97 cents, then boom, craters all the way down to 65 cents. Then it turns around and skyrockets to a peak of over $1.50, only to pull back again. These are some seriously dramatic swings, and they're exactly what's creating all the uncertainty we're seeing today.
And this wasn't just some quiet, sleepy movement. Oh no! On its busiest day, the trading volume just exploded to over 191 million shares. A number like that tells you one thing. The big money, the major players, were making some massive moves, basically pouring gasoline on the fire of this volatility.
Okay, so things have been pretty wild, right? But with all that chaos, are there any signs that the stock could actually start climbing higher? Well, let's take a look at the bull case.
So the folks who are feeling optimistic, they're pointing to a few key technical signals. First off, the stock is trading above its recent trend line, which is kind of acting like a safety net or a floor. And second, a really important momentum indicator, the MACD, is still in positive territory. That suggests there's still some buying power left in the tank. When you put them together, these signals point to some real, genuine underlying strength.
And here it is, the actual number for that MACD indicator. Now, the key thing to get here is that even after the price dropped, this number is still positive. For traders, that's a subtle but really important signal that the bullish momentum hasn't just vanished into thin air.
But of course, it's never that simple, is it? For every bullish signal we just saw, there's a bearish one pushing back just as hard. So now, let's flip the coin and look at the bear case. What's flashing a big old warning sign?
On the other side of the argument, the short-term picture, well, it looks a lot less rosy. The current price is sitting below its recent averages, and that signals immediate downward pressure. And that sharp drop from the October high, yeah, that happened on some really heavy trading volume, which is a textbook sign that investors were rushing for the exits to sell and lock in their profits.
This chart right here tells the whole story. On October 10th, you can see the buyers managed to push the stock all the way up to $1.38 during the day. But then the sellers came in with overwhelming force, driving the price all the way back down to close at $1.09. That is a massive rejection from the highs, and it signals a really strong wall of selling resistance. So all of this, it brings us right here to the main event. The stock is literally trapped between these two powerful forces, and the fight for who's in control is happening as we speak.
So these are the two zones you absolutely have to watch. Down at the bottom, you've got a support level. Think of it like a price floor, somewhere between 97 cents and about $1.02. And up top, there's a resistance level, a price ceiling that the stock just can't seem to punch through. It's stuck, plain and simple, right in the middle of this range.
Okay, so given this crazy tug of war, the analysis points to two very, very different paths forward. The next big move? It's going to depend entirely on which side wins this battle for control.
So here are the two most likely ways this could play out. Scenario 1, the bullish case. The stock holds strong above that support floor and finally smashes through the resistance ceiling. That could open the door for a much bigger climb. Scenario 2, the bearish case. It fails to hold support, breaks down, and that could trigger a pretty quick drop down towards that 87-cent level.
So where does that leave us? Well, ultimately, the analysis concludes that with the stock just pinned in this range, probably the smartest approach is to just wait and see. The stock is in what traders call a consolidation phase, which basically means it's coiling up like a spring, building energy for its next big move. The only problem is, we don't know which direction it's going to spring.
And that leaves us with the million-dollar question. The battle lines are clearly drawn between 97 cents on the low end and $1.22 on the high end. You have the bulls defending their floor and the bears defending their ceiling. So, which way will it break? The answer to that is going to decide everything.